4, 5. You have to focus on chapters, especially 5 and 11. We are going to also, as a group, do chapters, the section quiz 5 and 11. And then we're gonna move into our Prezi. Our Prezi is fun. Now, after we do the layers of information that you need to study, now we're gonna get into the repetition. So at the end of the day, we'll be doing our Prezi. Okay, so we're ready. So the last thing that we highlighted was payment for claims on 127, payment for claims. And you want to highlight, yesterday, I know we went over it, but we're going to do it again. We're talking about the recovery fund, right? If you look on page 126, all that is about the recovery fund. What you want to remember specifically is that where it says multiple claims, okay? So let's start where it says Florida statute limit each payment to the lesser of the amount of unsatisfied judgments or $50,000. So there's a limit of $50,000 per claim. This is for people when they do something that hurts the public. And now this real estate person is getting sued for monetary reasons, right? So it's limited to 50,000. Multiple claims for payments based on the same, okay, so you want to underline the same transaction are limited to a total of 50,000, regardless of the number of claimants or land parcels involved. And then you want to underline multiple claims against any one licensee are limited to a total of 150,000. So if you have one person that did many things wrong, they're going to pay out 150,000. If you have one person that has multiple claims against the same transaction, it's going to be 50,000. And also, if you have one person that is getting sued, the maximum is 50,000 on the recovery fund. That is what we're talking about, the recovery fund. Okay. Let's go to page 135, fair housing exemptions, fair housing exemptions on page 135 at the end. So here we're talking about the fair housing laws, okay? Different laws that came into effect that prohibit the discrimination against race, color, religion, national origin, familial status, handicap, sex. There's been other things that have been added on, but on the bottom of page 135, I want you to highlight the bullet points. It says federal fair housing laws do not prohibit age and family status discrimination under the following circumstances, okay? So there are exceptions to the rule. Number 1, in government designated retirement housing. Number 2, in a retirement community, if all residents are 62 years of age or older. Number 3, in a retirement community where 80% of the dwellings have one person who is 55 years of age or older, provided there are amenities for elderly residents. I can't believe they call 55-year-old people elderly, but anyway, right? And then on the next page, 136, the first bullet at the top, in residential dwellings of 4 units or less and single family houses, if sold or rented by the owner, underlined by the owner, who have no more than 3 houses, okay? And you're gonna see that last bullet on the final, sorry, on the state exam. So it's gonna say, which of these are exempt from the fair housing. Okay, so you want to remember that very well. Let's move on. Let's move on to page 142. Page 142, we're talking about deposits and advance rents. Okay? We're talking about deposits and advance rents. And what you want to highlight is if the landlord changes where the funds are being held after the notice is sent, he or she must notify the tenant in writing within 30 days of the change. Okay, so that means that if somebody comes and rents a property, and gives their security deposit and the money is put in one bank account, but then the landlord or the property management company, whoever moves that money to another account, the law requires that there is a notice in writing within 30 days, letting the person know that the monies were moved. Page 143, vacating premises. Under vacating premises, I want you to highlight when the lease terminates and the tenant vacates the premises, the landlord is required to return the security deposit and pay any earned interest within 15 days. So at the state exam, you may see a question that says, how many days does the landlord have to return the security deposit and pay interest? Okay, there was another question yesterday that we highlighted that said, if the security deposit is put in an account where there's interest, okay, everybody has to agree in writing where or who gets the interest. So you'll remember that. I just want to refresh it in your mind. Now we're talking about what is the notice time to return the security deposit and pay the interest. There's 15 days. Circle, underline 15 days. Now, the rest. However, if the landlord intends to impose a claim on the deposit, written notice of the intention and the reason for the claim must be sent to the tenant's last known address by certified mail within 30 days. So don't get it confused. If no security claim is going to be imposed, it's how many days? 15. If the owner is going to impose a claim, okay, so I need you to highlight the rest of that paragraph and underline within 30 days. Okay, within 30 days, if they're gonna impose a security deposit claim. I want you to highlight right below that. It says, failure to send the notice within 30 days will result in the landlord forfeiting the right to impose a claim. So when people talk about property management, this is a huge deal. This is why property management is one of the services of real estate, but it is a specialty. So it is not practiced the same way that sales or listings or acquisitions are practiced. So property management is a specialty. So make sure you highlight that chapter, there and underline 30 days. 30 days, underline 30 days under that. Okay, let's move on. Okay, now we're going into property rights, estates and tenancies, condos, homeowner associations, okay? On page 151. On page 151, I want you to highlight real property definition. What types of properties are there in real estate? There are two types of property in real estate. We talked about them yesterday. There are two types of properties. Yeah. One is no. There's two types of properties. One is real property, and the other one is personal property. Okay, good. And you guys can open up your mics and interact as well if you like. So yes, I just want to refresh that. So now it's telling you what is the definition of real property. Okay, so when you see a question, how many types of properties? And I know we think, okay, we think real estate, right? Real property, but remember when it's talking about the types of properties, two types of properties is real and personal. Now here, when it talks about real property is defined as, I want you to highlight the first sentence. A simple definition of real estate is that it is air, water, land, and everything underlying affixed. Affixed means attached. So right next to that, you may want to write attached. Anything attached to the land is considered real property. Okay, so you need to understand that concept. Come down to the bottom, real property components. One of the real property components is land. Land now is part of real property. Okay, land. The legal concept of land encompasses, you want to highlight what is land, the surface area of the earth, everything beneath the surface of the earth extending downward to its center, all natural things permanently attached to the earth. So that would be like what? Trees, bushes, plants, right? The air above the surface of the earth extending outward to infinity. That is land. So when you buy land, that is what you buy. Okay? Everybody with me? Yes, no, maybe so? Let's come down a little bit further down. Physical characteristics of land. Land has 3 unique physical characteristics, and you're going to see this in your state exam. Underline mobility, immobility, indestructibility, and heterogeneity. Okay, so 3 physical characteristics of land. Let's go to page 152. Real estate, the legal concept of real estate encompasses. So what is real estate? It's the land. It's all man-made structures that are permanently attached to the land. And I want you to highlight right below that. Real estate therefore includes, in addition to the land, such things as fences, streets, buildings, wells, sewers, sidewalks, and piers. And I want you to underline improvements because that is what it's considered an improvement. That's why it says such man-made structures attached to the land are called improvements. So at your state level, you could see a question that says, which of these are an improvement? And so you have to understand what that would be. Okay, let's move on to let's move on. Now we're talking about timeshares. Let's go to 183. 183. So disclosures that have to do with timeshares. Highlight disclosure of right to cancel. All timeshare purchases agreements must include a disclosure that buyers have the right to cancel without penalty or obligation within 10 calendar days, underline 10 calendar days, after the date of the contract signing or the date the buyer received all of the required documents, whichever is later. That has to do with timeshares. Okay, let's go to 194. We're talking about the concepts of title. When you buy a property and you close at the title company, you get a deed, right? When you get the deed, that deed is transferring certain rights to you as the owner. So I want you to highlight where it says ownership in a bundle of rights. So what do you get when you purchase a property? And it includes a bundle of rights. So I want you to highlight possession, quiet enjoyment, control, exclusion, and disposition. And the bundle of rights, look at the first paragraph, highlight where it says the bundle includes everything the new owner can do with the property within the boundaries of applicable laws. Okay, so when you buy a property, besides getting the land and everything attached to the land and the tree, you know that sometimes people cancel transactions because the owner decided to take the fruit trees. You know, there's owners that will remove fruit trees. And that's part of real estate, right? Well, I want to take my avocados with me. Well, you can't take the tree because there's people that buy houses because it has fruit trees, right? So here, the concept that you want to understand is, okay, besides the trees and the fruit trees and everything else that's attached to the land and the house and everything, what else am I getting? These are your bundle of rights. This is what you have ownership in when you purchase a property. Let's look at below that. We're talking about two types of title. These are really important. You're going to see them. Owning title to real property commonly connotates owning the complete bundle of rights that attach to the property, including the right to possession. More accurately, someone who possesses all ownership interests owns legal title. So legal title is what you get at the closing table. Okay, so make a note there. Underline legal title. Underline legal title. Legal title is what you get at the closing. Okay. Then it says legal title is distinct from equitable title, so different. So equitable title, which is the interest or the right to obtain legal title to a property in accordance with the sale or mortgage contract between the legal owners and the buyer or the creditor. So equitable title is what you get when you get a contract accepted. So equitable, write those notes in your books. Equitable is what you get when you get a purchase contract accepted. Legal title is what you get when you close on the property. You guys with me? $195. $195. Voluntary alienation. Voluntary alienation is an unforced transfer of title by sale or gift from an owner to another party. That is called voluntary alienation. So I am removing myself from the property, okay? I'm voluntarily granting over a deed or a will. So voluntary alienation, when you alienate, when you separate. So write those little words down because now you gotta start developing triggers. Triggers are things that are going to remind you. That's why I tell you little stories or ways to remember. Voluntary alienation is when you willingly separate yourself from a property, okay? Either by deed, by grant, by will, okay? You're voluntarily giving the property up. Involuntary alienation, which I want you to underline. So underline both voluntary alienation and involuntary alienation. Involuntary alienation is a transfer of title to real property without the owner's consent. Involuntary alienation occurs primarily by the process of descent, distribution, escheat, foreclosure, eminent domain, adverse possession, or estoppel. Okay? So just know the difference between the two. Let's go to 199. I want you to highlight and underline laws of descent, escheat, foreclosure, and eminent domain. Laws of descent. So think of descendants. You know, when you have a descendant, you have someone that is following your existence, right? So for example, my grandchildren are my descendants, right? Think of it that way, descent. Law of descent, it means that the property is then going to be distributed, or the ownership in the property is going to be distributed to heirs, so underline heirs, and the respective shares of the estate they will receive. So when you see laws of descent, it has to do with heirs. Escheat, this one you're gonna see for sure, 100% at the, probably both, but definitely at the state level. In the absence of heirs, title transfer to the state by escheat. Okay, in the absence of heirs, title transfers to the state by escheat. Property that has been abandoned for a statutory period may also be escheat to the state. So when somebody dies and they don't have a will, they don't have an heir, right? Because somebody could pass away and they have a will, they say, you know, in the will, they say, I don't have heirs, but I want everything I own to be given to an organization, okay? So think of escheat as somebody got cheated. Escheat, somebody got cheated. If there's no heirs, it either goes to the state by the process of escheat. So escheat is somebody got cheated. Somebody did not get an inheritance. Somebody did not get something. It was just taken by the state. Or it could be left for a period abandoned, and then eventually the state takes it. So escheat means there were no heirs. So you want to underline no heirs, absence of heirs. Foreclosure, everybody knows what foreclosure is, right? Eminent domain, in many cases, public acquisition of property is a voluntary transaction between the government entities and the private owner. However, I want you to highlight everything, but now you're going to underline. In the private part, if the private party is unwilling to sell, the government may purchase the property anyway. The power to do this is called eminent domain. So think of it, it's eminent that the government is going to take a piece of the property. For example, remember this when you see eminent domain. When Colonial Veterans Bridge was built, I think that was like 2001, 3, somewhere around there. That whole thing that is now Veterans Parkway had houses. Okay? So eminent domain, here's what I want you to trigger. It's eminent. No one's gonna stop the government from acquiring the property, because when government comes in to acquire property, it's for the infrastructure of a city. It's to do something that's gonna benefit the city. So remember, the Colonial Bridge, all the way through Veterans, everything that goes through, you know, well, not Del Prado, but from Country Club, Santa Barbara, Skyline, Chiquita, all that had houses. Literally, they moved those houses. Like they picked them up and relocated those houses. Those people were forced to sell. Obviously, the government comes in and they negotiate, but they were forced to sell because you can't put Veterans Parkway through the middle of somebody's living room, right? So that is eminent domain, when the government comes in to acquire property because they have something they have to do in the city to continue growth, okay? Okay, let's move on to page 206. We're gonna go through this. It's pretty long, but I'm gonna give you the highlights for the most important things you have to remember. Under the essentials of a deed, right? The essentials of a deed. Highlight and underline, there's a grantor. Highlight and underline, there's a grantee. Under the components of a deed, deed consists of a grantor, underline grantee, underline consideration, words of conveyance. It's called the granting clause, underline granting clause. Interest or estate being conveyed. Okay. Deed restrictions, underline deed restrictions. Lali, you with me? But you're not underlining it. Oh. No. Let's start again. Underline deeds, underline grantor, grantee, So that whole first sentence, conveyance, underline deed restrictions, exceptions, reservations, appurtenances, legal description, underline signatures of the grantor. It must have the signature of the grantors and 2 witnesses. Those are the most important things you must remember. You should remember everything, but those are the most important things. Under that, what are the requirements for a valid deed? Requirements for a valid deed. It must be in writing, so highlight must be in writing. Be signed by the transferor. Highlight be signed in the presence of 2 witnesses. So that's very important because you have to sign a deed in the presence of 2 witnesses. And on the next page, 207, include a space for the parcel identification number. That one is really important because you're gonna have a question that tries to kind of fool you on that. But remember, it must include the parcel identification number. Okay, the types of deed on page 208. Bargains, highlight bargain, general, specialty, and quit claim deed. On page 216, highlight and underline easement by prescription. If someone uses another person's property as an easement without permission for a statutory.
Yeah, that's a 208 kind of lost me.
208? Let's see. Okay, 208. Talia, you're on 208? Okay. You're gonna highlight bargain, all the types of deeds. So you have bargain, general, special, and quit claim. Got it? Talia, if I'm going too fast, let me know. Okay. Where was I? Let's choose it. Easement by prescription. So easement by prescription, if someone uses another person's property as an easement without permission for a statutory period of time. Okay, that means a time that the law designates. And under certain conditions, a court order may give the user the easement right by prescription. So what you need to understand and underline is prescription means easement by prescription. That word prescription means regardless of the owner's desire. So whether the owner wants to give up the property or not, or this easement, if it has been used for a statutory period of time, you with me? That person may be given the right to that easement by prescription. Okay, let's look at 218. Highlight and underline percentage lease. What is a percentage lease? You need to know what a percentage lease is. And it gives you 3 bullets, so highlight those 3 bullets, which explains what it is. Page 222. Voluntary or involuntary lien. Okay. So voluntary or involuntary lien. You want to highlight that? Let's move on to chapter. Let's see what page are we on. Oh, 263. 263. Suit for specific performance. So chapter 11 is a very important chapter, just like chapter number 5. And this one is talking about contracts. Right, contracts. So suit for specific performance, and what you're gonna underline is specific performance suits occur when it is difficult to identify damages because of the unique circumstances of the real property in question. The most common, so highlight the most common instance is a defaulted sale or lease contract where the buyer or the seller wants the court to compel the defaulting party to go through with the transaction, even when the defaulter would prefer to pay a damage award. So specific performances, if you have a buyer and a seller, and now the seller doesn't want to sell or the buyer doesn't want to buy, they have the ability to sue that other person to perform. Okay, to go through with what they had agreed. So that's what suing for specific performance means, that we want to remember. Okay, let's move on to. Okay, on page 349. 349. Real Estate Settlement Procedures Act, you're gonna highlight that whole first paragraph. So the Real Estate Settlement Procedures Act, RESPA, is a consumer protection statute enacted in 1974. So underline 1974. That's something you need to remember. Let's go to 356. Now we're talking about the closing process, right? So on the bottom of 356, where it says state documentary stamp taxes on the note, I want you to highlight and underline promissory note. Intangible tax is calculated on the amount of the loan shown on the underlined promissory note. Okay, on 385. 385, under governmental influences. So what does the government influence? You want to highlight governmental influences, and you want to highlight the areas that the government can influence: local zoning power, local control and permitting of new development, local taxing power. I want you to highlight the paragraph that is following that, a good example of government influence over the local real estate market is a city, and underline government's power to declare a moratorium on new construction, regardless of the demand. So I want you to highlight that. Government's power, underline government's power to declare a moratorium. Okay. Four zero one, we're gonna highlight identifying comparables, right? So how do you identify a comparable? These are the three things you must keep in mind when identifying a comparable. Now we're talking about the sales comparison approach. So when you're listing a property or the appraiser is doing an appraisal on the property, most of the time, if it's residential, they're gonna use a sales comparison approach, so identifying comparables, okay? You wanna highlight those three, that is what you need to go by. When doing also a CMA, because you guys are gonna do CMAs. Do you guys know what a CMA is? Who could tell me what a CMA is? CMA? Okay, right on there, CMA, comparable market analysis. So you can write next to those bullets, CMA, comparable market analysis. On 406, let's go to page 406. Under the cost approach, highlight the first paragraph. The cost approach is most often used for recently built properties where the actual cost of development and construction are known. 406. It is also used for special purpose buildings which cannot be valued by the other methods because of the lack of comparable sales or income data. So the cost approach, that first paragraph there. Let's go to 427. Depreciation. Now we're talking about real estate as an investment, okay? So you must remember these 2 years. Highlight where it says depreciation schedules. Highlight the whole paragraph, depreciation schedules on 427, and underline 27 years for residential rental properties. And underline 39 years for non-residential income properties. So you must know those 2 years. Okay, let's see. 447, calculating property taxes. Highlight that area there, calculating property taxes. To determine the actual tax, the taxable value is multiplied by the county's tax rate, just as the county's financial needs and operating budget may change every year. Consequently, so may the tax rate. That's important for you to know. On 468, non-conforming use. I think I gave you that yesterday, 468. Okay, highlight that paragraph for non-conforming use. A non-conforming use is one that clearly differs from the current zoning. Usually, non-conforming uses result when a zoning change leaves existing properties in violation of new ordinance. So underline where it says usually non-conforming uses result when a zoning change leaves existing properties in violation of the new ordinance. Okay. And that is it. So we've done 2 full layers of highlights, okay? Some for your final and the others for your state. Now, we need to go back, because remember, the secret behind all this is now you know where to focus. Now you know where to focus. Now we need to go back and understand and create some, triggers for you to be able to do this. But 19 chapters consolidated into the main areas that you need to understand. Now, remember, each one of these areas could have multiple questions. That's why, let's go over the tips that I gave you yesterday for taking your final and your state exam. I want you guys to tell me, who wants to give me the first tip? Read the question twice. Good. All right. You guys have your tips? Take out your tips. Let's go. Let's go over your tips. Maybe some of you missed something or you need to write it
What
again.
did they ask?
So number 1, you read it twice. Then you ask yourself, what am I being asked? You're gonna have questions. Some say, what is false? What is false about this? Or what is, what is we're gonna see more things like that today. But if they ask you what is false, that means you're looking for what's true. So that's why you must ask yourself, what are they asking me? Because that's where people get confused. Okay, they read it, but then they don't really comprehend the question. Right, so and these people know how to write these questions. I mean, this is done by, psychologists that know how to make sure that you're understanding. So you read it twice. What are they asking me? What's the next tip?
Use process of elimination.
Process of elimination, yes. So things that you already know totally make no sense, you eliminate them so you can reduce the chances of, getting it wrong. What's the next tip?
Create flashcards.
Create flashcards, yes. So how many of you bought your flashcards so far already? Okay, you guys have some, I know your brain was tired yesterday. And then you guys went home and did 45 minutes of self-study, right? Yes, everybody said yes, absolutely, absolutely. Okay, was there another tip that I gave you guys? Answer all the questions that you know first. Yeah, so when you first get your final or sit for your state exam, there's gonna be some that just start jumping out at you. Was there anything else that I gave you? That was it? I'll bring you a couple more tips. I'll share a couple more tips with you. Okay, so let's go ahead and dive in. Do you have this thing? Yeah, there we go. Okay, so let's go ahead and take the next, we're gonna go till 10:15. So you guys can do your disc. We're gonna take a break. At 10:30, so let's take until 10:15. Everybody open up, do you have your disc? Did everybody get it? You guys have it here, check your, okay.
Yes.
All right, thank you. So let's work on your disc and then